Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it cracks in the armor. So, because we're seeing some things that tell me that maybe we're about ready to have that correction we've been looking for here, or get a little bit more of a pullback. Last week we talked about, is it a breakout or bull trap? Well, I don't think we got that quite confirmed, although over here on the Dow Industrials, it kind of looks a little bit like a bull trap. So far on the S&P and the Nasdaq 100, not so much. We'll see. Let's talk about it. All right, so here with the Dow Industrials, down 934 points for the week, closing well below the low of the prior week. And, we're getting divergence. We're having divergence on all three of these indicators. I call them, I look at them as separate indicators with the RSI, DI plus. I know this is all part of one suite of what they call the directional index. Got the ADX, DI plus, DI minus, but they're all saying divergences. They were not confirming the move higher that occurred in the prior week. S&P 500 up 1.45, basically flat on the week, and a little doji type candle. Same kind of thing is going on with the indicators here. Now, I know, you get these are like little, waving the flags, but you got to have the price action roll over and break down. Now, we're starting to get that in a couple of places, and we'll take a look at that, especially with what happened on Thursday. The NDX, this was up 262 points. So this was the strongest in terms of the move here above the prior high that occurred, the March highs. But we're still seeing the same kind of thing, the same flags are being raised here on NDX. Take a side-by-side of the industrials and the transports. That hasn't gotten any better. I mean, the transports are not confirming anything that's going on with the Dow. And transports are very weak again this last week, down 418 points. So divergence here over the last couple of months, and significant divergence from mid-year last year, so almost a year in terms of what was going on. Okay, let's go back over here. Let's take a look at the SPX a little bit more. So here's that weekly, here's the daily. So here's the damage that was done on Thursday. Okay, so we had a strong move up in here, and then we got this move back down here on Thursday. I'm not buying this. It reminds me of over here. It reminds me of this big, huge, this is what I call a WR7 bar, widest ranging bar or candle of the last 7 days. And sometimes, it doesn't seem to matter, like right in here, it's going to continue to go down. But many times, it's kind of like you've expended all your energy and then you're going to regroup. Okay, and that seems to be what we're doing here. A little bit of a regroup going on. We'll see how many more days that's going to last. And let me go over and take a look at, I think next I want to I know what I want to show you. One more thing on the S&P. Let's take a look at the equal weight S&P. Not confirming the move higher in the S&P at all. So pretty big divergence between the S&P equally weighted index, okay, and the regular S&P, which is, heavily weighted by the market cap of the individual stock. So, and that's why you got, NVIDIA, all the Magnificent Seven having the heavy influence on the S&P. Okay, let's take a look at the Russell 2000 ETF IWM. Now, this did not punch above the March, April highs. Okay, this is continuing to look like it wants to head south. We had a pretty negative move in here Wednesday, Thursday, but we're getting a little bounce like we got in all the major indices on Friday, although the Dow barely bounced. I think it was like 3 or 4 points on the Dow. So that's what's going on with IWM. This continues to look to me like it's rolling over. We'll see if we come down, close this gap, start to get overlap heading south. Now, let's take a look at the NDX. So this has been the stronger move. We looked at this earlier on the weekly to the left. Here's the daily. It was up 185 points when you rounded on Friday. Again, big negative move. It's kind of interesting to get this kind of a candle when you had the explosion in NVIDIA. So what we're watching for now is for the price action to start to break down and to start to roll over. It really hasn't happened yet, even with the big move that happened on Thursday. So the Elliott Wave picture that I'm holding on the Nasdaq 100 is this. So because of the strong move higher in here in the market and kind of the relentless push, I am moving to this more bullish count of an impulse wave structure here. And that because we had a sharp pullback for wave 2, I am looking for more of a sideways for wave 4. What we don't know yet is when you look at it, what we don't know yet is what this is going to evolve into. Is it going to be a flat? Is it going to be a triangle? Is it going to be a combination of things? I'm expecting a sideways type of move because of what happened here with wave 2. But, and when you look at the daily, this is a 3-wave, this is a 3-wave. And so if it's a flat, I'm expecting a 5-wave move down, but after we complete it, then I'm expecting one more pretty strong leg up for wave 5. Okay, it's just a matter of how long is that going to take. Now, if it turns into a triangle, this may stretch out for months, going 3, 3, 3, 3. So we're just going to have to watch and see. I mean, we definitely have divergence that's showing up here, at least as of this week. We'll see how that continues to play out. Okay, so that's the picture we've got on the Nasdaq 100. So I talked about how the Dow Industrials and the Dow Transports are out of sync, and that's a negative for the market. But another negative is when you look at what's going on with the S&P and everything, how the market has moved higher from January. Here's January, okay? And this is the McClellan Summation Index. This is a cumulative of the McClellan oscillator. This should be in sync with what the market's doing. Well, it's not. So this has not punched to new highs. And, you know, yeah, we got this little sell-off that occurred here into April, and then we bounce back. Do we go to higher highs? No, not at all. So I think this is a big negative also. So, you know, that's why when I start to see these kinds of things develop, it just tells me we got some cracks in the armor. The real question is, how big is this pullback going to be? Okay, so let's take a look at commodities. I want to look at the Bloomberg Commodity Index because it is showing some pretty interesting things going on. So we had the breakout of the downward channel weeks ago, and then we stalled out with a little bull flag. Then we had the breakout the prior week, the week of May 12th. And then this week, we punched higher, gapped up, and then reversed back down in here. Why? Because we're struggling to get through the resistance of this triangle here and the highs that we've got. You know, the high here, 108.89, 108.32, 108.22. And so we got up into that territory and everything just reversed. So let's take a look at gold. I'm going to go back to the moving average view. Let's just go to GLD right here. And this is what's going on. It was down $7.74 this last week, so a pretty big hit. But here's what I'm looking at with gold. I think we either have the wave 4 complete here, or it's going to extend a little bit more and chop sideways in here. Again, a sharp wave 2 pullback. It could very well be that we have more to go in here. Now, this is kind of a pretty bearish engulfing type candle that's showing up in here on GLD. So we'll see, you know, we may get a little more coming down to the low that happened on in April. The low was 210.71. So we'll see. It's been very positive after we got above that huge resistance zone. Okay. And it just exploded and took off. Now, silver had the big resistance zone too. And we got above it, right? Huge move the prior week, the week of May 12th, and we closed above it. Now what are we doing? We're pulling back into that resistance zone. This should become support. Now, my zone may not be quite wide enough. I mean, if you look at, I've got the low end of the zone about 2740 or so. The high here on the week of April 7th, the high was 2724. Okay, so in the low this last week, 2761. So I'm still bullish silver, but I'm just wanting to see this thing get its feet underneath it here and continue to push to the upside, because I think we got more to go in silver. Okay, so that's what's going on with SLV. And I want to take a look. I'm going to go back to the moving average view. These dashed lines are just showing you the range for each year. So this is SLV in 2023, 22, 21. And I want to take a look at copper, United States copper. This is not a very heavily traded ETF. Matter of fact, the volume for the last week was 2.2 million for the whole week. But that volume has really picked up over the last several weeks as this thing took off. So had a similar kind of thing, had a kind of a resistance zone up here. Now this, notice how it came back. It looks like it's below the zone I've got. Well, it's definitely below the zone I've got identified right here. But the zone may be a little bit wider if you look at this high and some of the highs right in here. So if I add this high right here, which is 29.23, then this is right at the bottom end of the zone where it closed at 29.23, which is kind of interesting. So for the bulls and the bullish move on copper, you'd like to see it again, get its feet underneath it and resume the push to the upside here after that big strong breakout. But we had a big WR7 candle closing. We're way above the Keltner channels and pushing hard, so we'll see what happens. Interesting move though with copper, and there's people are citing a whole lot of reasons why the thing ought to be going much higher over the coming years. Okay, that's it for today. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to this channel, hit that little subscriber button. If you'd like more of this information on a regular basis, head on over to joehenches.net. Everyone have a great week, and remember, markets closed on Monday for Memorial Day. Enjoy your holiday weekend.